Hey, Ron, welcome to the show. And let's jump into it and just tell us how you first got into the world of real estate.
Sure. First off, thanks for having me. Much appreciated. I got into the real estate space through construction. In the late 90s, I bought a house that I was going to renovate and sell. I was in my mid 20s. I'd had construction experience growing up as a kid, and thought I knew everything, and turned out that I didn't really know everything, and I certainly didn't do enough due diligence on this project. And it turned out that I couldn't do what I wanted to do with the house, so I had to donate it to a local historical society that was right down the road. Fortunately, they took the house, so I didn't have to tear the house down. But I ended up having to build a brand new house. So I ran around getting people to co-sign loans for me, built this 7,000 square foot house that took me almost 2 years, and I broke dead even on it. But in the meantime, we kind of got it and started to make a name for ourselves as a builder because people saw the work we were doing. We started getting other jobs along the way. And that was kind of the launching pad for how I got into real estate.
So what was the biggest mistake you ever made in real estate?
There's certainly been a number of them over, basically a quarter century of doing this. And what I would say my biggest mistake is really not like, I certainly have had projects that didn't go the way I thought they were going to go. Early on, I was buying properties to kind of take a step back. Construction arm of our business always stayed in place. It was always a big part of what we did going forward. But I realized after a few years that I didn't really like building houses for other people. So we really started using the construction vertical of our company to be a backstop for our investment side of the business. And that's really what we started doing. So when I was younger, and I don't want to say this was through me being smart or anything like that, we found that we were getting a lot of good projects and we were buying smaller multifamily, single family. I was renovating them, refining them, and they were all cash flowing properties. Your traditional BRRRR method before I even knew what BRRRR was, to be perfectly honest with you. And I just became impatient. People were offering to buy these properties, so I would sell them and I get into another one. And all these things, looking back 20 plus years later, if I just held on to these things, and had been patient and continued to build and build and build, I certainly might be a little bit further down the road than I am today. So my biggest mistake was patience, not understanding the long term and focusing way too much on the short term.
So flip side here, think back to what's the best deal or best learning experience you've had in real estate so far?
Probably the biggest learning experience for me at one point in, let's call it the first quarter of our journey as a business, was I started to try and outsource some of the construction piece of the business when it was a little bit outside of our geographic range, and relying far too much on them and losing some control over the project. And it didn't happen just one time. It happened a handful of times over a period of years where I would get past a situation like that, think I got, okay, let's try this again. And it would happen again. And it became challenging trying to control costs, control timelines, especially when we had multiple projects going on, because I knew how to do it and I knew how we should be doing it and how it should be done. And, it cost us. It cost us money. It cost us time. Fortunately, none of it was catastrophic, but it definitely was a learning experience that, the whole second half of my career, that's something we haven't done. And if we do, not to say we don't outsource certain things or use subcontractors, whatever it may be, but we have a very different way of maintaining control over that today.
So fast forwarding to today, tell us kind of how GSP REI, what it looks like today from an organizational structure and what it focuses on.
Sure. So GSP REI really came into existence a little over 5 years ago. I developed a relationship with somebody that did a lot of work with HUD, specifically the National Community Stabilization Trust and the NSI program. We became a certified development services partner for that program. So we were getting assets directly from HUD, but how we kind of stumbled into that was we were buying somebody else's portfolio that was already in the program, and they just couldn't manage it. They were having major problems. They didn't have a good construction operation. So that's how we got into it. And I wouldn't say probably around 2019, we were doing a lot of projects that were disposition projects. For our portfolio, we focused primarily on Pennsylvania, but we started getting a lot of projects from New Jersey. And so we were renovating them, selling them. What I started to notice was looking at the overall market, the NSI properties were kind of drying up. We weren't seeing as many of them. And we kind of had this epiphany that this overall single family residential market's getting constrained. And, even before the pandemic, and we just started keeping everything. So GSP, we always used our own capital prior to GSP REI. When we founded GSP REI, we started raising outside capital because we really saw an opportunity to scale up. And that's what we started to do. And since then, we still do work with HUD, but our main focus today is single family, workforce and affordable housing, because we believe that's really the biggest problem from a supply standpoint, not just regionally for us, but across the country.
Now, I want to talk about the name GSP, because before we actually record on here, I was asking what GSP stands for. And I know what it stands for. I also know a team member, I think, who it's named after as well. What is GSP named after?
German Short-Hair Pointer, which I have two of. My partner, Peter, I'll give him a little more credit for, let's say, taking some of their best traits and kind of tying them into what we do. They're energetic. They know how to zero in on things. So I can't take credit for that. That was really him. I just love the dogs. And I think we just thought it would be a cool name.
Yeah, I like it. I mean, I've had a dog that was half German Short-Hair Pointer, and I love them. And you're right, the energy, and once they get focused on something to chase, man, they just go after it.
Nonstop.
You've been in real estate investing for a long time. A lot of people in the passive pockets community, hey, they've done active investing, they're doing passive investing now. I'm always curious to hear, what does financial freedom mean to you? And then what tips you have for real estate investors in terms of optimizing their portfolio to achieve it?
The answer I would give today is very different than the answer I would have given 20 years ago. I think first you have to understand later in life, what are the things you want to do? What's important to you? Is it spending time with your family? Is it traveling with your family? Is it playing golf? Is it, being on a boat, whatever it may be? And starting to craft a plan early on. How can you can accomplish that? What are you going to need? Obviously that's going to change over time. The 28-year-old me would have thought I needed a lot less than the 52-year-old me, but it carries over today, and I've got, as we were talking about before the podcast, I've got kids my oldest is 22, my youngest is 5. When I think about financial freedom and the ability to enjoy life and spend time with my family and all my kids and do things with them, that plan continues to evolve today and it'll change. My advice would be throughout the stages of your life, really look at what's important to you, what you're going to need to accomplish that. Stress is such an awful thing, when you are trying, you want to have that work-life balance where you can enjoy the fruits of your labor. And it may sound a little bit cliche, but I really believe that, because there are times in my life where I was just so all consumed with work that I probably wasn't as present as I should have been at home. So evaluating those things, figuring it out, what do you need to be happy going forward? Because it's not all about money. It's, money's a mechanism to truly enjoy the things you love to do in life.
And speaking of money, because, hey, we're all real estate investors and we need it to retire, right? I know GSP REI, you guys have an income fund. Can you kind of just give us the executive overview on what your income fund is and how it generates the revenue?
Sure. This is usually Peter, my partner's role, but I'll give it my best shot. So we pay a preferred return of anywhere from 10 to 12%, depending upon the amount invested and the time for the investment. The way we pay those returns is through income producing properties. The majority of our portfolio is revenue producing through rents, but we do at times renovate and sell properties if it doesn't fit our model from a tax standpoint, whatever it may be, because sometimes we do find good projects that from a real estate tax point just don't fit our model. So we'll renovate and sell as well.
Great. And like I said, I'm a big proponent of income funds because as I've gone through my own personal transition to, more, less active and more passive, and also seeing a lot of investors do the same thing, I think everyone out there should consider income funds for, part of their portfolio and cash flow. And kind of last question here for you, Ron. You got any final tips or advice or words of wisdom for investors out there, whether they're active investors or passive investors, just like final words of wisdom for them?
I think that if you want to be invested in real estate, which I think is one of the best asset classes to invest in, figure out if you want to be an operator or if you don't want to be an operator, because and make sure that you've got the infrastructure and the support to be an operator. And that's a decision only, individuals can make. So I think whether one way or another, it's, investing in real estate's a fantastic way to generate income and wealth, but you got to decide if you want to be active or passive. That can be a tough decision because I think a lot of people want to be hands-on, but sometimes I think be careful what you wish for.
I think that is a great question and what a lot of people should ask themselves. So Ron, thank you so much. I enjoyed the conversation and appreciate you taking the time out of your schedule.
Thank you. Thank you for having me on.